That's a huge problem, confirmation bias. When you're in a project or invest in anything and it starts to go up, you start to think you're a genius and then it confirms your bias. For example, I bought into this project called CyberKongs. Very, very expensive NFT set. I think I paid around like maybe over 25 grand literally for a single JPEG. Call me stupid, call me dumb, whatever. It happened. But I had this confirmation bias. My friends who were I considered smart traders in the space were saying, oh, this is gonna like go crazy. It's like the next Bored Ape Yacht Club. However, the price did start to go up. So I was up, several $1,000s, like 5 grand within a day. And literally within a week of me buying this $25,000 JPEG, the price starts to plummet. Here I am starting to panic, and the price keeps going down and down. And then I'm questioning, why the hell am I even holding this damn picture? And overall, I have a whole entire YouTube video on this. I lost 20 grand on that one trade, and that was definitely something that could have been avoided for sure. And I think that also just goes to depict how crazy of a mania phase that we were in, and also how stupid I kind of was to throw that much money and gamble on a single NFT.
I want to ask a couple of more questions about the past, and I want to talk about the future in a little bit. When we're talking about speculation, right, as we've talked about before, one of the things that you have to contend with is money management. And as you were saying, Brandon, like how much money we're going to put into one project, into one asset. And the thing about NFTs, and correct me if I'm wrong, that's different about, like, let's say if you were dabbling in tokens, right? If you were dabbling in tokens or coins, whatever you want to call them, at least you can get your money in and out like fractionally, right? So you can put $10,000 into it and you can liquidate $8,000. But as I understand it, if you buy a $20,000 ape, you're in for a $20,000 ape until you sell that $20,000 ape.
Exactly. It's highly, highly liquid, which is why the price can go up so much really fast. But it's also the reason why it could go down so much really fast.
So can we talk about, and this is for either one of you, what the money management strategy had? Like, what did your beginning portfolio look like? Were there any rules? But for myself, when I was dabbling, and I didn't do NFTs, but during the craze, I was in tokens, and I set aside a portfolio of $10,000. As somebody who is pretty not risk averse, I'm okay with a bunch of risk. My units are going to be $500 to $1,000. So it's one unit is 500 and then 2 units is 1,000 is what I'm going to be putting into this certain project. And so if I put in 1,000, if I put in 2 units, I got 10 shots at this thing. If I only put 500, then I have 20. Did you guys approach it in a similar way, or is there any type of thing that you guys thought about?
Initially, I would say there were almost no rules. Again, this is when I was like a very, very beginner. I had like almost no budget. I was just like thinking whatever could make me the most money. I was down to just try it out. But then later, as I've like lost, and I've lost a lot and I've made some money, we kind of going back to this whitelist thing. I became like very, very like, no risk, only upside trading. So in a sense, like after we kind of established who we are, we got special access to these upcoming collections. So for example, let's say there's a new collection coming out on Saturday. We were able to buy them almost like at wholesale prices, let's say at like $100. And then you're able to take that price after you buy it and then sell it on the retail market for, let's say, $500. So that's 400 and without any risk, because you're almost able to see the market ahead of time. Because before I purchase it for $100, I can look at OpenSea. So I look at OpenSea and see that they're trading at like a higher number, like 500. So I'm like, okay, there's no risk. I'll buy it at 100, sell it at 500, and there's my 400 in like no risk money. It's almost free, which was why, again, it was a crazy time. So that's kind of the trades that we take now as to before, where it is more speculative, just like hoping that the price would go up.
Oh, yeah. Adding on to Christian, I think when we both kind of came out of high school, there were no rules basically, which was completely dumb. I will definitely say it here. A lot of people say like, oh, you're like smart. When you first jumped into these trades, like, how did you know? A lot of it, I'm going to be completely honest, was luck. And there was also a lot of learnings along the way. Like I said, I had that $3,000 loss. I also had some big gains as well. But I would not recommend people going and blowing like their graduation or like all their birthday or savings on speculative assets. I would say almost more times than not, you will lose that money. And I learned that from that first trade that we initially talked about. And luck was a big factor, I think, in both of our journeys. So the way I would, like Christian said, we definitely became more risk off and less degenerate, you could say. And the way I think people maybe should think about it, or the way I like to think about it now, is if I'm going into a very speculative venture, I will set aside money. But I'm not thinking about this as like actual capital or like my quote unquote business. You have to be totally fine losing all of it. And that's kind of the way we approach like NFTs or, coins now, because most of the time it is just speculation. And if you're going to play the game, you got to play the game, I guess, smart and be okay at losing the money. So I kind of look at it like going into almost like a casino and just trying to get lucky.